Hey guys, wanted to talk today about seller financing, specifically seller financing for a condo. And the reason I want to talk about condos is because Fannie and Freddie Mae, the two big loan companies that most buyers get their loans from, are really kind of cracking down on risk evaluation and giving out loans for condo complexes. We had a deal that we put together, so I wanted to kind of talk through this deal and maybe seller financing is a good option for you as a seller, and it could also be a great option for you as a buyer, especially with rising rates and the way that rates are right now. So let's dive into this. So use really easy numbers here. So we have a condo that we think is worth $200,000. We have a buyer come in that wants to put 20% down. And as a seller, right, you can dictate all of these terms. So if we put 20% down on a $200,000 loan, that's $40,000. So the loan amount that you're going to be offering to your buyer is $160,000. So this specific deal that we put together, we did a 30-year fixed with a 5-year balloon payment at 6.99%. So what's a balloon payment? So we did a 30-year fix so that we could get that loan payment to where that buyer wanted it. And then what happens is when year 5 comes, that loan becomes 100% due at the end of that 5th year. So whatever's left on the loan, the buyer either has to pay it off 100%, go out and get new financing, so potentially go out and get new financing at a lower rate, and come in and pay that seller everything that is left for that principal loan amount. We did this one specifically at 6.99%. So what happened on this, so if you go in and get a regular loan, you have to pay closing costs to that lender, whether you're buying down points or all of the lender fees that come with that loan. So what happened on this one is because we did seller financing, we didn't have any lender fees, except for I think we paid, that buyer paid $500. We actually asked the seller to pay for it. Paid an attorney, I believe it was about $600 to do a promissory note, which dictated all of these terms for the buyer that the seller and the buyer were in agreement upon. So that effectively saved this buyer $10,000 in closing costs that actually went into his down payment. So his down payment was actually $50,000 instead of $40,000, but just for easy math, right? So that buyer effectively saves $10,000 that can go back into that down payment. And so this loan amount is basically your cost basis. So if you think the condo is worth $200,000, we get your buyer in there for $40,000 that goes directly into your pocket, and then now you effectively are the lien holder for that condo. And so let's break down this math just a little bit further. So again, the 5-year balloon payment at 6.99%. So this is, and I know this is a little bit small here, but so 5-year amortized loan. So this is the interest for year 1, 2, 3, 4, and 5, and then on the other side we have the principal amounts. So if that buyer took all 5 years to pay that loan, or to all 5 years to pay down that loan, this is what you would make in your interest payment from that buyer, which is $54,409.02. And then at the end of that 5 years, the principal due to you as the seller from that buyer is $150,594.44. So what does all of this mean? And some of you guys are probably thinking, well, Ben, I could put my money into a treasury right now, a 2-year treasury, and make almost 5% or even more than 5% right now. Why would I want to do this? I want to get out of this condo. Well, we don't know what's going to happen with interest rates, right? You could be, you could be right. The interest rates could continue to go up. They could continue to go down. But what you have here is you are now playing the bank. So you have a hard asset that you still have an interest in because you are now the bank. So, right, day one of closing, you get $40,000 into your pocket. If they take all 5 years, this is the added interest. So your effective sales price after that 5 years for that condo is $254,409.02. But the potential upside to this, or downside, right, depending on which way you look at it, maybe year 2 or 3, this buyer defaults on the loan. Because you're the bank, you can now take that property back. You can do this all over again. So I would say the plus side to this over a treasury is you still have a hard asset here, right? That is appreciating. Over the long term, real estate appreciates. Yes, we have ups and downs, we have fluctuations. So you have a hard asset. You've got $40,000 in your pocket on day one. After the 5 years, you have almost $55,000 in interest. So your effective sales price of that condo is $255,000. If you guys want some more information on this, or are thinking about doing seller financing, reach out to us. Like I said, we represented the buyer on this one, but learned a lot through this process. And with the loan regulations and risk evaluation that Fannie and Freddie are having, this might be something that would work really well for you. So give us a call. Thanks.